Let's call it the AAA club, a fairly exclusive club of 20 countries that have a top rating given by Standard & Poor's. Not surprisingly, as the world's largest economy and the largest debtor, the U.S. is the largest sovereign debt market, $11.1 trillion. The rest of the government AAA-rated paper adds up to $7 trillion. Let's see how it breaks down. This is according to Nomura International. The five that follow the U.S. are Germany at $1.72 trillion, France at $1.7 trillion, the UK gilt market, that's the bond market, $1.3 trillion, Canada at $1 trillion, and finally Australia with its AAA rating at $300 billion. There is some concern that if the U.S. is downgraded, it may force a re-examination of some of the others, especially those who have exposure to the challenges in southern Europe. So why the mess in the U.S.? Well, the numbers tell the whole story. The 2011 budget deficit, 10.7% of GDP. The 2011 debt to GDP is at a ratio of 102%. The U.S. has not been in that position since the end of World War II, when it had to fund the rebuilding after that. The U.S., in fact, was averaging 60 to 70% during the 1990s. It topped over 100% after the funding of the Iraq War, the Afghanistan War, and then the collapse of Lehman Brothers and that huge financial bailout. And despite all the discussion about what could happen with the budget deficit and the Republicans and the Democrats agreeing eye to eye on what could happen, the long-term debt is likely to continue rising. $14 trillion today. It could top $20 trillion by the year 2016, no matter what they do over the next week.